What's up, everybody? This is Jimmy with Trading Decoded. It is December 4th, 2025. Today was an interesting day. Meta got a price target upgrade, and the whole market, which wasn't looking so hot in pre-market, decided that it was going to take off to the north, which was nice. It was promising and looked good for maybe a green day, but a green day it was not. But before we get into the charts, we're going to cover the idea of you buying my book, because I'm assuming you're wanting to learn how to do this stuff. It's all written in nice English words right here, and this is what it looks like. You can find it on Amazon. All the links are down below. And if you don't like reading, well, you can listen in our Discord community, where I do this every day, Monday through Friday, 9 a.m. till 12 in the afternoon. There are reasons for that. I know it's not for everybody, those hours, but my system works very well for me within those hours, and it doesn't work very well for me outside of those hours. So instead of fighting against the system, I play to its strengths. With that said, let's go ahead and take a look at the charts and discuss what the hell we were looking at today. Our call put scenario. Our call line was above 624.87. Our put line was below 623.83. Now, today was interesting in that we were putting in lower highs leading into the open, and then we had a nice little pop up in pre-market. This probably saved me. I wanted to play calls today, but this little pullback leading into the open had me second guessing that. But what sealed the deal for me not to get into calls was the fact that we were opening above our call line. We don't ever take the call put scenario if we are opening beyond the level that we need to break to justify the trade. Okay, so that is why I did not take calls. It happened before we even opened, and then we opened above that line. Ideally, we would have pulled back to support and then could have taken calls through the line, but that didn't happen. Okay, so that was good in that respect for me personally. Once we saw this big red candle halfway through it, I said, you know what, guys, I think I'm going to be ready for puts. And the only reason I'm not taking them yet is because ADD is printing sizable green candles, and SPY is sitting on the pink line. Pink line is the stink line. However, a couple minutes later, we did move down, and the people in my community who trade the Qs got to make their money by breaking the call line or the put line before I got in. Now, I got in on a pullback, they got in on a breakthrough, and it did get down to where we wanted to go, which was this first orange line. So if they got in here, they stayed in and they made their money. If most people got in when I did, and I'm going to explain why I decided at this moment to take puts. It's not because I could see the future. It's because for the first time since the open, we were pulling back to a resistance on both charts. It's this line here on the SPY, this line here on the Qs, the put line, and ADD for the first time was printing red. And I said it out loud. I said, guys, I want to buy puts, but I need ADD to at least not be rocket shipping up. I would love to see the Qs close below the put line. Now, that happened 2 minutes before we took the trade, so that was good. And we were at resistance. We were pulling back on SPY, and I said the stop loss on this is a candle close back above 685.36. That's the most recent lower high on SPY. So I'm going for it. So we bought the pullback. ADD was red. Fortunately for us, ADD started to print more red, and this move explosively got down, closed below our target, got through the next target. So we're holding on, all excited, wondering if we're going to make it down to the next target. As we were halfway through, I said to God and everybody, I said, guys, if we get down to that line or anywhere near it, I'm going to market myself out of this trade. I don't care what happens after that. I don't care if it keeps going down. I don't know if that's intuition or just me not wanting to be greedy. That ended up becoming a 60. Hold on a second. Let me open up my TradeZilla here. It ended up becoming a 68.43% win. I'll take that any day of the week. And a lot of people took that same exact trade from me, with me. Not everybody held to the bottom. A lot of people held to the bottom. A lot of people held through the bottom. We had an alert down there. When I set my alert, it's a little Jimmy secret. It's a pretty good indication that I'm going to hold that trade until we get to it. We got close to it. I thought we were going to hit it here. So I did mark it out a hair early, but the very next candle, it did push down. I did leave a decent size amount of money on the table because those that move down there looks small, but it was about an extra $1,000 on my position size that I left on the table. Neither here nor there. Point was, we got in on a pullback for the right reasons, and it paid better than we expected. Now, the thing that I want to relay to people is that we don't aim to find home runs in our trades. If they happen naturally, that's a byproduct of the right entries, right? Because if you don't know when to get in the trade to begin with, then you stand no chance of making any money on it, let alone 68+% on it. Okay? So with that said, pick your battles. Wait for the proper setups. Oftentimes, almost always, patience will pay you more than aggressiveness. Okay? It'll pay you more than taking multiple trades per day. Almost always. You know, I am not of the mindset that you are obligated to take your position or take your trade every time you see the setup. In fact, I feel the exact opposite. And it's not that the odds get better or worse, it's that your emotions change after every trade. And the compiling of those emotions get heavier and heavier and heavier, and it will change the way you trade depending on what has happened in every trade leading up to the next trade you take. You don't have to believe me. You can listen to other people on the internet tell you every time you see the trade, you should take it. You're obligated to take it. No, you're not, because you're not going to treat it the same every way. That works when you're a computer. No human being can trade like a computer. Okay? I don't care what discipline level you have. I don't care how much patience you have. It's exciting to make money. And when you have a good green trade, all of a sudden, it's human nature. We say to ourselves, well, I got quite the cushion here today. I'm going to take another trade because I can afford to give up some of this. It would still be a good day. That's what goes on in our heads. Likewise, you take a big red trade. Naturally, you're going to see a new trade set up every 5 minutes, 10 minutes, 1 minute. But you're just really trying to undo the red that you did on the first trade. That's all emotionally driven. You cannot get around that. And again, if you are one of those traders that feels nothing throughout your trades, I am envious of you. I am jealous of you. I've been doing this every day for over 4 years, and I have not even come close to feeling nothing, good or bad, in my trades. So kudos to you if you are that guy. You could probably trade all day long and have zero negative effects from the results of those trades. But most people, especially over the years of teaching people how to do this, I haven't found anybody, and I'm not one of them. So for me, one and done is the way. I've got people that solidly believe in that, and they have done infinitely better by just cutting down the number of trades per day that they take. But you do you. Anyway, beautiful trade. That was my only trade of the day. As we pulled back here, now this red box, we drew this red box somewhere around 10:15. I'll explain what it was in a second. But we moved up and we put in a lower high, and then we put in a higher low. So off the lower high, we were expecting to get all the way back down to the support. It didn't get there. It came back. It retested that resistance area. This time it held, and then we moved down. But there was nothing to trade here, in my opinion, because either Qs were going up and ADD was going down, or vice versa. There was not a whole lot of confluence here, and this was a very uncomfortable thing to deal with. Now, hindsight, it looks like a nice downtrend, but when you're looking at it and seeing the size of these candles and watching it move up and down violently, you start to quickly lose confidence in the chart, right? So when you see our normal trade setups or your normal trade setups, whatever it is, doesn't matter the strategy. My philosophy is this. We found trade setups that have a very high win rate, okay? but they don't work at a high win rate every day. So there's a difference. So the setups we find and we're trying to trade statistically have a high win rate, but not every day is going to be a statistically winning day. So when you see a chart where you start to see, hey, this is a trade we normally take, but it failed, and you start to see that failure rate higher than it being a winning rate, what do you think you should do? I would say you should set some sort of boundaries if you're not going to stop and just say today's not a trading day. Not every day is a trade day, okay? Now, many people will look at the chart and say, well, I'm just not going to trade, and you'll sit there all day because you think that if you walk away, you're going to miss the trade of a lifetime. I understand that feeling, but there are things that work against you throughout the day too, such as theta if you're trading options. So it's not apples to apples, right? You might miss a big move, and that's all right, but you also have to tell yourself that's not the only big move that's ever going to exist in the market ever again. We find good moves every single day that feel comfortable to take, okay? And that's what we're aiming for. This was not a comfortable chart here. Now, I want to explain to you something, where this red box came from. Many of us started to lose confidence in the chart, not the trade setups, right? So the chart wasn't giving us what we normally like to see when we were seeing these setups. You'll notice there's no arrows in here. And that's because at this moment, we were defining, at the very least, an area that we should be cautious if we are within. That's why I drew this red box, okay? Now, right here at 9:55, I want to point out, this was before the red box existed, I want to point out a trade that we were looking for based on our rules. Very simple, a Jimmy trade setup. What's the criteria for that? We have to break the trend. In this case, it was a downtrend. This takes puts off the table. What are we looking for to justify the calls? We want to get out of the downtrend and we want to take out resistance so long as there's room between that resistance and the next resistance. Well, guess where that was? The next resistance was right here, barely 20 cents away. Okay? So if you're getting there and we cross this resistance, and you want to take that trade, you better be quick, because if the next resistance fails, you're going to get stuck holding the bag. So we chose to skip that trade, but the line still remains. I told everybody if we can get above this resistance at 622.45, we'd be aiming for this resistance up here at 623.17. Now remember that. This was being discussed at 9:55. I said to the upside, that's the only trade I would take. Okay? To the downside, after we saw this chop and we drew this red box, I said the defined level to the downside is we need to get out of this red box to the bottom. There's plenty of room to go to the next support. And as long as ADD is at least printing red at the time, I'd be willing to take that. Now, as this support gets stronger and stronger and stronger, you have to understand what's happening at that level. Buyers are stepping in to prevent the fall from happening. So you're increasing the number of people that have bought to hold the market at this level. So why, when it becomes this strong, does it often break big if and when it breaks? Well, I'll tell you why. It's because all of the buyers there, the minute we start pushing through that level, are red in their trades. Nobody likes to see red in their trades. So what do? They have to turn into sellers to get out of their buying position. And what happens when they turn into sellers? Well, they add to the existing sellers and make the moves happen, usually pretty violently, pretty aggressively, and pretty quick. This is that scenario. So we got up here. We never crossed the resistance level that I was looking for calls. We come down. ADD is already starting to slow down. Candles are getting smaller here. We get a nice big red candle on Qs and on ADD. Another big candle on Qs. We got a running start as far as I'm concerned. Guys, if we can get through this line here, we're looking for the next one down. That was a monster move, and it happened in less than a minute. I didn't take it, but we knew what we wanted to see If we were going to play puts, we knew what we wanted to see. If we were going to play calls, you just had to be patient enough to wait for the right setup. This was that setup. We broke support on both charts with room to go. ADD was in our favor. Let's go. Okay, so in that scenario, we moved from, on the Qs anyway, 621 for even numbers to 620.28. Okay, that's pretty good. 70-cent drop in a minute. That's a lot of money. That's what leverage is beautiful for. We bounce off of that. And now I told everybody, while this is coming down and ADD's printing red, I said, guys, what's one of our rules? If both charts are hitting support at the same time, it's better to take yourself out of the trade than to try and be greedy and get more. We don't know what's going to happen when we hit the support on the Qs or the support on the SPY. But we do know that if both charts are hitting support at the same time, there's going to be a lot of buyers happening in that area. And sometimes it might break through, sometimes it might not. But if you're prepared for either way, meaning you have a trailing stop in as you near that line, or you're getting out when we get to the line, you protected yourself from a nasty turnaround that would have cost you a small fortune. And don't sit here and tell me, oh, but I would have stopped out before it turned into big bullshit. You would have held on to this, hoping that resistance is here, because I know what happens. You were big and red, you were big and green in your trade at this point, and when that pullback came, you were no longer very green. And if you were green at all, it was way less than it was. And guess what happens? You start to remember how green you were in that trade. You start to regret not taking it when you were there, and then you become a hold and hoper. And you watch it go not only from green to red, but big red. And now you're all the way up here saying, please, baby Jesus, please, Stephen, please, whoever, please save my ass. I know I should have taken my profits down there. I'll do it. I'll get out the next time we get down there. I swear, I promise. It's just like when you drink too much tequila at a party and you're puking that night. Oh, I'm never drinking tequila again. And then Billy Joe Bob over there the very next week is drinking fucking tequila the next week, right? This is how it works, guys. This is trading psychology. It's human psychology. So protect yourself from yourself. Beautiful trade there. We bounced right off of that line, and guess what happened? ADD started to print some greener candles, right? So we were no longer dropping, and ADD was more sideways than anything at this moment. What's this right here? 1033. I said, guys, this is a higher low. We're more likely to break resistance here. Keep an eye out. Higher low would normally get me into a trade aggressively. I didn't take this either. But let's just use the thought process we were trying to apply at 9:55 this morning. If we can get above this resistance, we'd be targeting the next resistance. Well, I don't know if you want to call it luck or if you guys just want to start believing in the fact that price action and support and resistance is really all you need. Where did this candle legitimately stop and not even move a penny over? 9:55, we were looking for this exact trade. We never got presented the opportunity to take it. Well, here we are at 10:36 and 10:37 coming off of a higher low. Get through it, right to it. Take your profits when we get there, guys. Why? Well, SPY and Qs are at resistance at the same time again. Just like they were at support. Don't mess around with recent history. What happened the last time we hit the top of that box? Sellers came in and said, yep, that's it for this particular ride. And they won. 1, 2, 3 times. Don't overstay your welcome. Then we start moving down. What's this right here? So Jimmy trade setup. Basically, we broke the trend. We took out support. Okay, that happened here. Once we take out that support, if you're taking an aggressive entry, that new support needs to be your resistance. And it did its job. Very, very difficult move down for my more conservative traders. What's this right here? This is a lower high. So we had some people get in here. We had some people get in here. We had a lower high. We're going to break this support and head down to the next support. Guys, we talk about this before they happen. We know what we're looking for. We wait for the right setups, and then we execute our trades. This was a banger of a trade. Very, very nice trade. Very nice trade. Winner. Winner, winner, chicken dinner. Then what happens? We start putting in higher lows. Okay, so we don't want puts when we're putting in higher lows. And I had a member in calls here. Now, this is my believe in Steve talk, okay? At 11:51, was it? I drew this vertical line and I put an alert up here. And Adam, if you're watching, Adam said, I'm in calls. I would love to see us get to, we were trying to get to this point right here, 622.30, and then I'll take my profits. I said, I'll do you one better. Let's aim a little bit higher. Let's put the bat signal out there for Steve, or the Steve signal. And I want Steve to hit that level before 11:51 or by 11:51. So Steve is, well, Steve's amazing. We'll just leave it at that. And I want to show you that I drew that vertical line at 11:42. Okay, you can see it right here, 11:42. So down here at 11:42, Adam's in his trade. We're sitting on support. I said, Adam, we're going to ask Steve to do us a solid. We're going to set our alert up here, which means Steve knows where we want to go. And we're going to give him another criteria, which is we want him there by this time. Guys, you don't have to believe in Steve. But at this point, he comes through so many times that I can't ignore the fact that we'll call Steve the guardian angel, the spy angel, whatever you want to call him. That dude is serious. Now, I'm not going to get into who Steve is. Doesn't matter. If you know, you know. But I want you to see, at 11:42, we drew this line and we set our alert. You couldn't have scripted this any better. We touched the alert at the line, the cutoff time, 6 seconds before that candle, before this minute was over. Insane. Did Adam hold all the way through? He didn't. He didn't have faith in Steve, but I did. And it all worked out. That's just my fun play of the day. After that, the market is kind of batshit crazy today. We had a nice little sell-off. I've been at the vet. I just got back a few minutes ago. Higher lows, so we're expecting resistances to fail, which would have been this guy here, and we're going to head up to the next resistance. You guys are looking at it right here. I didn't call this out because I'm not on the mic anymore. Okay, we find support. We bounce off of it. Surprise, surprise. ADD starts printing some green candles. Okay, we pull back. Do we pull back to the most recent support? No. What's that make this? A higher low. Well, that's great, Jimmy. We have a higher low here, but we have resistance here. Higher lows means we're more likely to break resistance and head up to the next resistance. Just looking left, where is that? Well, the first one's here. We got there pretty cleanly. Where's the next one? Here. We got to it and through it. Where's the next one? Right here, where we stopped and didn't get through it. And what was happening when we got there? Oh, ADD started to print its first red candle. And SPY was at a resistance at the same time. Now, this is another higher low, so I wouldn't be surprised if we continue up at least to this resistance again. And if we get through it, you'd be aiming for the orange line. But I digress. Guys, the system's not complicated. It doesn't allow for you to take huge losses because we keep our stops tight. Theoretically, where they're supposed to be. If you follow the rules, this is a very easy strategy to understand. Okay? What makes it difficult is your emotions. The damage you've done to your emotions leading up to today or in your trading career. It makes this a very, very difficult thing to learn how to be good at. But it is possible. And I could say that with confidence, not just because for me it's worked out, but because I have several, dozens, tens of, I probably have currently in our group 50 successful day traders. Now, out of a group of 200 and some odd people, paying members, that's a pretty good ratio considering it's a 95% failure rate across the board. Now, I do want to show you. We just talked about it. You had a higher low here, higher low here. Look at where we're at right now, guys. Again, ADD's printing green. Let's see if it keeps going. I don't want to make this video any longer than it is. If we get through this resistance, we'd be looking left to the next one, which happens to be right here at the orange line. If you were taking higher lows to the first resistance, you already made your money. You're out of the trade. And with theta being as high as it is this late in the day, it's probably a smart idea to not hold through targets, especially when they're a decent distance away. All right. So with that said, we're going to wrap this one up. I hope you found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, well, I'd love to have you. There are links down below. And if you'd like to learn how to do this on your own time, well, there's the book right here. And for those of you who are still watching, I took a poll in our community about me creating a course that is on a different level. And the overwhelming majority said, yes, I should do it. So it's going to be a huge undertaking. It's going to take me months to make because it's not going to be your standard run of the issue course. It's not going to cost a fortune, but it is going to be interactive and it's going to make you make decisions in real time. And it's going to put you in a situation to learn. And that's what you should want to do, not copy somebody. You want to learn. And so the reason this course hasn't existed already is because of the amount of work and effort and energy it's going to take me to make it, because the way I want it to be is not like anything else that exists. So if you're interested in something like that, let me know in the comments below or be on the lookout for it. I am going to start working on it, but it is going to be a several month project. So with that said, I hope you all had a fantastic day. Looking forward to tomorrow being Friday. But until then, I love you guys. See you.